what's good, everybody? Welcome to the closing beat. Happy, well, it is Wednesday. Hope you're having a great day so far. This is our stock market show. We're financial advisors here at Jazz Wealth. We build and manage our own expense-free funds. So if you want to invest with us, what we do is we act as your financial advisor. We help build and manage portfolios for you, help you understand your retirement numbers, and all of it's right on our website. You can check out everything. We're like the only advisor that posts the performance of our funds on our website because we actually manage them. Anyways, tomorrow we're doing a full overview for our customers, sort of our once a year big update on the funds adjustments that we've made. We're going to share data with you never even knew we tracked. So sort of an insight into kind of how we do things here at Jazz. That's for customers only. The invite will be going out tomorrow, and if you miss it, the replay will be available in the dojo when you have a chance to check it out. Well, today is the 10-year anniversary. That's the big headline. 10-year anniversary of the S&P 500 being in a bull market, going back to March 6th, 2008, if you go back that far. That's where this whole thing started. Sort of funny if traders look at it. If you go all the way back to the intraday low on March 6, 2018, the low was 666. So it's sort of like a ooh. Anyways, let's talk about the markets today, because today you got more of a pullback in the market, more meaningful, and I want to go more under the surface than what you're going to see on TV. People just say, it's a little pullback, 0.5%, whatever. You got the Dow lower on the day by 133. S&P lost just over 0.5%. Nasdaq lost 1%, and I wouldn't mind focusing on the Russell. If you could look at the Russell up above there. Nasty day for that one as well. So let's dive into it. We'll check it out here. In the S&P 500, you have today, sure, a pullback, a little over 0.5%. On the surface, doesn't seem like much of a big deal. Look a little deeper, and you notice that every day, the number of stocks in the S&P 500 that lost more than 1%, that number is going higher and higher. Today it hit 202, meaning out of the entire S&P 500, 202 of those stocks were down by 1% or more. There were a ton of them. And so that tells you that the selling is more broad-based. There's more people willing to take profits up at these highs, more people interested in seeing the markets pull back, and maybe just thinking that we are going to pull back. We don't know yet. We'll have to see what happens. Economic news sure didn't help at all. Private payrolls today came out from ADP. It's just a number that they send out. Came in at 183,000. We were expecting 185,000. The Fed put out their beige book today, and in the beige book, the language changed to just a little bit more cautious. So we'll see what happens there. It was literally the change of one word. Everybody looked at it and goes, oh my God, that means they're getting more conservative here. So we'll see. But the point being, there was really no sort of exciting news to hang your hat on and be a buyer today. The Russell 2000 down about 2% today. This is leading the way to the downside. Been bringing that up over the last few days. Hey, kind of interesting that the Russell hasn't participated the same as the markets. It's outperforming to the downside. Not really a good thing there. And so basically you have a market that's just sitting near highs waiting for some opportunity to trade higher. If not, it's telling you today, I'm going to pull back. Give me some good news, give me some good data, or I'm going to pull back. Well, what could that be? There was a report that came out today that Trump is really pushing for this trade deal to kind of start to come to fruition with China so that the markets can get boosted before the 2020 election, because you know that's going to be a selling point if the markets are really strong. And so there's this pressure to kind of get that done. That would definitely help us move over these highs, provided that the trade deal is actually something of some kind of substance. It has to have something new that we didn't even think about. And of course, a big sort of ceremony meeting, shaking of the hands, maybe down at Mar-a-Lago as they're talking about here in Florida. And so the short story here is the markets aren't doing anything until we have some sort of good news or bad news to continue pulling back. In the meantime, all the little drips of news that come out are weighing on the market. Oil being one of them. We'll cover that. Well, let's cover it now. So you got crude oil down a little bit more today. Not bad. It overall still chopping around in this area. So if I was able to just sort of draw out a little, draw out a line. Let's see how long it stays in this range. You have days where it's a nice positive day, days where it's a negative day. Well, today was one of those negative days because crude oil inventories came out. And so analysts were expecting a drawdown of about 9 million barrels here in the U.S. And instead we saw an increase of about 7 million. So lately these analysts have been way off. Not that I would be any better, but they've been way off. And that's sort of been shocking the markets on a weekly basis. This number comes out every day on a Wednesday unless the Monday is a holiday, and then it comes out on a Thursday. So if you want to follow along, for the most part, it's on a Wednesday. So that's that. So oil and energy stocks really weighed on the markets today as well. So if you're looking through and you're going, what are all these names that are down today? A lot of that has to do with oil and energy. Semiconductors a little bit lower on the day, something you might want to notice. That pulled back to the 20-day moving average. In the short term, that's just a technical area people use. I paint it as a green line on my chart there just to show where people will be looking for support. I think it'd be more than acceptable if it came back down here to the 200-day. I think it would attract some buyers there. So semiconductors, a staple, something we really need to help support the markets. Just wanted to point out that that wasn't playing along today. And as far as banks go, regional banks were the weak side of things. KRE is the symbol I'm looking at now to use or to illustrate this to you. Broke down a little bit more today. Look, it's had a great run. It's pulled back, right? So if it continues to pull back, not many people are going to care. It's going to seem like it's all scary for a while, but not that big of a deal. Now, market-wise, if I can go back here for a second, think about the mindset of the investor. Where are we right now? We're right here. And if you started investing before Christmas, you have no gain, no loss. If you started investing a month before that, you're basically no gain, no loss. If you invested a month before that, no gain, no loss. If you started investing all the way in last summer, June, you are basically right back where you started. Are you emotional about it? No, you're probably happy to have recovered from what you saw, the dip in your account. You're not emotional about it. So who's emotional here at this point? The people that bought at the absolute high. That's really it. And that's why you don't see any serious selling pressure at the moment, because you haven't found a way to scare people. Right? If we were still down here and we only rallied a little bit and then started to sell off, okay, you have a ton more people that are scared that the markets will never bounce again. You know how it goes. People think, oh my God, it's the end of the world, right? So at this point where we're at, it's going to take a lot more than just a couple of days of a pullback to scare all these people, all of these people, and all of these people, almost going back to May of last year. So you can kind of get what I'm saying there. Anyways, that's enough of the markets. Let's talk about some stocks today. General Electric, a little bit lower today. Yesterday, we brought you up to speed on this. The CEO said they're going to have a negative cash flow this year. Had a $4.5 billion free cash flow last year. So while they're doing some trickery financially to make things back in shape, the negative free cash flow this year, not a good thing. Bank of America lowered their price target now down to 12 from 13. And JP Morgan has a $6 price target. And a little smart aleck went on, he wrote a little thing saying, our $6 price target looks almost too high at this point. So he was kind of quick to try to grab the headlines there just for a brief moment. Stocks lost over 20% just in the last 8 trading days. That's a 20% pullback. So GE, do you like discounts, do you? Anyways, Abercrombie & Fitch, yep, they're still a public company. So 20% higher today. Really, really nice move on this one. Beat analyst expectations on earnings by 20 cents. We're going to cover these expectations tomorrow in our class for customers. What does that even mean? And what are analysts even thinking? I got a great analogy I want to share with you. So anyways, they beat by 20 cents. Revenue was much better than expected as well. Same store sales or comp store sales popped 3%, which by the way was double expectations. So firing all cylinders there for Abercrombie & Fitch. I think they're going to upgrade their stores or something too. I feel like I put that in the scroller down below or something. Why? The stores are nice. They look great. We got gray, get the white borders in it. What are we doing? So anyways, they think that if they upgrade their stores, they're going to attract more business, and sales in 2019 will be a lot higher. Dollar Tree higher by 5%, breaking to new highs here. Not quite 52-week highs, but new highs. The symbol is DLTR if you want to follow along. Strong day for that one. The stock beat on earnings. Revenue was better than expected. The company is going to close 390 Family Dollar stores. I don't have that. I hope it's 390. They're trying to optimize the business. So Dollar Tree higher today. People like to hear that, right? Getting more efficient, cutting the fat. Urban Outfitters, another retailer. You notice how there's a lot of retailers earnings here. Earnings better than expected, revenue better than expected. Stock hit a high, started to sell off because the company said they expect a weak start to this year. They put in a cold winter. Everybody uses that, by the way. Home Depot and Lowe's, they're famous for that. So it's a colder winter than we expected, so therefore our spring lineup may not sell as fast as we hope, in addition to a, quote, costly mistake that they made with their spring clothing. So I didn't see anything any deeper than that, but those were the comments, and then the stock started going until it came back to lows. So stock back down near lows if you're following along. Hey, Amazon, JP Morgan, this is just coming through here, and Berkshire Hathaway, they're working to reduce healthcare costs. They're going to start with their employees. We've covered this before. They're analyzing everything. They're going to make a sort of a separate company to help reduce healthcare costs for the couple million employees, I believe, that they have. Well, they named it. It's called Haven Healthcare, and they actually have a website that just popped up, havenhealthcare.com, if you want to see what they're doing. I'm a big fan of this attempt here. Big fan of the guy leading the company. Imagine that you're putting the smartest people in the room up against healthcare. This is why economies work, right? This is why things can't be overpriced for too long. Someone's going to find a way to make money. These guys are going to find a way to reduce costs, make money, and everybody's going to be happy. That's a I don't know. I'm a big fan of that one, so we'll see what happens. BJ's Wholesale stock was a little bit lower on the day. Earnings better than expected, revenue better than expected. Sales were just sort of okay. Didn't really excite anybody there. Stock started to move lower. TripAdvisor lower by 3% on the day, downgraded by Cowen. And they said that, hey, people are just going to Google. They're not using TripAdvisor. They're going to Google more and more, especially the younger travelers. And so that hit the stock here in the short term. I don't know. You let me know what you think. Do you use Google for searching? So what I end up doing, I usually just type in Google like Tampa to wherever, and I'll see what it says, sort through all the responses that I want, and then I usually just go hunting for better prices anyways, or see what kind of upgrades I can get. So I'm not one of them. ExxonMobil lower today just by a little bit. The CEO says they're going to spend $56 billion in capital expenditures. They're going to spend money to grow. So investors, you don't like to see that $65 billion. So we can't measure a success at this point. If you're going to spend $65 billion on something, you're asking for a lot of trust from investors that you're going to grow in a way that makes that investment worthwhile. So you expect the stock to take a little hit on that news. NIO. This is a new IPO. They make electric cars. Well, actually, they don't make electric cars. They have electric cars made. I believe they only make a few of them at the moment, and they're not selling very well. So slower deliveries, lower sales than expected. They don't even make their own cars. Think about it. That'd be like me saying, Jazz, we make electric cars. Well, we hired a company to make the electric cars. We make a couple of them, but we just make electric cars, slap our logo on there. I don't get it. Anyways, Fitbit. Fitbit's going to start selling cheaper devices. They hope to sell a lot of them, by the way. High expectations here. So they launched 4 of them today. If you're into those sort of things, they're a lot cheaper. And stock was higher by about 2%. And finally, if you're following the Newmont/Barrick Gold news, these guys met in New York. Barrick Gold was trying to do a hostile takeover. Newmont basically slapped him in the face, said, no, you're not. But while you're here, why don't we do some kind of joint venture with some of our mines out in Nevada? And the CEO of Barrick Gold was distracted by this and said, let's talk about it. They met up. They said progress was good. We're going to meet again. It's like a mini trade deal inside of the big trade deal. It's kind of cool to, I don't know, I'm into the drama. That's what I do. Anyways, that's all I have. If you have any questions, happy to try to help you where I can. Tomorrow, you've got earnings from still retail, Barnes & Noble. Yep, they're still a public company. Costco will be coming out as well. Then you have Hovnanian Homes. That'll be interesting with the new home sales number that just came out. H&R Block, International Gaming Technologies, and Marvel Technologies. We always said Marvel. Oh, Kroger as well will be coming out. Johnson & Johnson if you're someone who suffers from depression, Johnson & Johnson just got the first FDA approval to take depression medication through a nasal spray. Ooh. Okay. Take a pill. I don't know. Logitech reaffirmed their full-year guidance for 2019. So if you follow Logitech, symbols LOGI, stock was higher by 1.5% as well. Brandon, you can't buy Haven Healthcare. It's its own partnership at the moment. No, you can look at their website, and that's about it. Google Flights, you like that one? Cool. Nice. Ask Jeeves. Is that still something? Is it still around? Cool. What do we got here? AMT and CCI. I've looked at AMT. CCI, oh wow, just hit new highs as well. To me, these are some of the ones in the category where I get it. Momentum's building. More and more people are going to get excited about this. But can it just pull back one more time, right? Like, you don't want to pay those high prices. You want to see it fall, get a little bit of a panic there. Wouldn't that be nice? That's about it. How can the S&P still be in a bull market after the October-December pullback? Actually, the Russell 2000, not to dodge your question, but the Russell 2000 is now back in correction territory. Right? The Russell 2000 is now down about 11%. Yeah, it puts it back in correction territory from the highs. Depends on how you measure it in your case. Economy as well in a bull market. So we have not had 2 consecutive quarters of declining GDP. It's probably coming, right, based on what happened today. It's probably coming, but so far, everything's looking sweet. Would just be nice to see a pullback. All right, I'm just browsing real quick. Sorry, just trying to dig around. Healthcare pulled back a little bit more as well, and industrials. If you follow industrials, XLI is the symbol I use to follow that. That's 4 straight days lower. And I think that's about all I have for you. Yeah, even REITs pulled back today, by the way. Yeah. Hey, anyways, that's all I have for you. I'm going to wrap it up. Do you want to invest in Lyft? Did you see the video we posted earlier? A really geeky breakdown of the Lyft IPO. Probably something more than all the other YouTubers say. I wanted to kind of show off some of the data as well. So if you're thinking about investing in the Lyft IPO, you just check the video out, get a little more detail. It's not one of those videos where it's like Lyft, they are a ride sharing company and you use your phone. And I wanted to get into more detail. So maybe you'll check it out. If we help you in some way, hit the subscribe button. Keep us in mind here at Jazz Wealth. We'll be back tomorrow. Yep, to do this all over again. And see you then.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.